All right. Good morning, everyone. Hope all is well. It is Friday. It's Friday, November the 4th, 2022, and it's NFP Day. Lots of news coming out today. Let me just check my calendar here really quickly. Yeah, Canada has some very big news too at this exactly the same time, 8:30 a.m. New York time. We have the employment change and unemployment rate for Canada. That is red folder news for them. It does affect the U.S. North America kind of sings the same tune, and so moves very much in tandem most of the time. And then, of course, at the same time, 8:30 a.m., we have non-farm payrolls and unemployment stats. So lots of good things. Average hourly earnings, too, and average weekly hours, and non-farm payrolls, private participation rate, all of this stuff coming out at 8:30. We should see some fireworks and some explosive movement, but we'll see. That almost always is the case. Occasionally, though, we expect fireworks, and that's when nothing really happens. You might get a 20, 40-point move up and down, a little bit of jiggling, and then things kind of smooth out from there. But we will see. I'm expecting that we're going to get some fireworks today. All right, what are we doing here? For those who were new, it's almost everybody. We've only been doing this for about 3.5 weeks now, I believe. But we have 115 videos on YouTube already, and that's why I'm losing my voice. So thank you for bearing with me with this marginal laryngitis that I'm experiencing as we speak, or try to speak. But we're looking at the NASDAQ. I'm trading the NAS this morning, have been for the last few weeks, just because that's where the most of the movement is coming from. And we're seeking movement for scalping here. We also swing trade and position trade in a very big way. I don't mean big in terms of dollars, but we're big believers in swing and position trading here at Zerillion. NASDAQ, we have a 10-minute chart on the left-hand side and a 1-minute chart on the right-hand side. What I'm doing today is something a little bit different. I did do it for the last couple of sessions too, and that's to start with naked charts. You see there's nothing on this 10-minute chart. I'm going to make that a full-size chart, and I'm going to walk through how I mark up my zones first thing in the morning. A lot of people are asking me about this, and I guess it's not surprising if you're relatively new to trading to look at how do you go about finding zones and negotiating structure in the market. Here's the way I do it, very, very simply. Back to simple principles. I'm now into my 4th decade as a trader, and this is the stuff that really matters, folks. You can have all your 20 indicators if you want, but that's not what really make you successful. It actually is personal self-mastery, but these little zones are very important places to start. All right, looking at the Asian region right here. We can see that prices stopped going up here this morning right here. So what am I going to do? I'm going to put a zone right there above the bodies. I don't include the wicks on the 10-minute chart. We can talk about why a little bit later on, but I want to get these in before the market opens here in about a minute and a half. I was going to say an hour and a half. It's by the way, it's 4 a.m. my time, and this is just coming into the London Open now, of course. Then we have another zone. I'm going to say right here. See where this market bottomed? This is drive down at the end of yesterday's New York. That color shading back there is the New York session. This is all of New York yesterday. It's actually a very range-bound day with a contracting pattern. And we might get to that. I'll talk about this as a very interesting contracting pattern. But for now, let's get our zones in for this day. Support is here. Prices were driving down. They found support. The forces at work here supported them from going lower. And that's why it's called support. It's a floor. And prices rallied. They started going up, but then there was a resistance, right? The forces that were at work here resisted a further advance, and that's why we call it resistance. Very simple. Right? Now, these prices are driving down. How far will they go? Don't know for sure. Don't have to know. Nobody knows. But what I do know is that there was a little minor support area right about here. There's another one below here. I'm going to leave these two for now. What I sometimes do is this, actually. I'll just do it now so we can keep things very consistent. I'll put in these lines here just to remind me that if prices do get through this one, there's likely to be a little bit of a pause here. Not always. On the open, this could just drive right through, up or down. And we're now open, by the way. You might even see that happening right before our eyes here in Technicolor. But for now, that's what we're dealing with. Okay, market's open. I'm not going to jump to anything here. I'm just being very patient. We'll see how things open up. All right, again, we're on the 10-minute chart. But now what? So I got these zones. What do I do with them? Well, what happens if prices get up here? Well, we need to look over to the left. And what do we see? Where are prices likely to stall? Doesn't mean necessarily reverse, but to stall. Well, here's an area here. Why? Because they stalled there before, just yesterday. Prices were rallying up, and then they stalled and went back down again. Well, that's relevant because the forces that made that happen may still be there in some form or another. I'm going to do a video on what those forces are and why that might happen. There's another one right above there. Prices violently rallied. Violently in terms of this particular session. That's not violent according to this session, right? That was FOMC. But it doesn't matter. For that day, that was an aggressive move. And that's important to know. And then above there, what do we see? Well, I see something happening here. This is kind of minor, but I would put that one in. Okay? So this is what we're dealing with now. We're going into our session with some framework and with some structure. I'm going to extend this one out because it does actually go all the way out to here. You see this? The truth held, and the truth held. Right there. This is what I would consider clean traffic. From there to there, right? Very smooth movement up and down, and even before. Up and down, this was just sliced through like butter, same thing. And so I put this arrow here, not as a prediction of where prices will go, but where I believe that prices are likely to move freely given the clean traffic to the left. That's all. And now the market is open. Now that I've done this on my 10-minute chart, and you can use whatever chart you want. You might use a 1-hour chart, a 4-hour chart, daily, 5 minutes. Same principles apply. These are support and resistance zones. These happen to be based on 10-minute movements in the market, right? And now I open up my 1-minute chart to get some refinement action or perspective. And there you see it. You'll see that these lines, these zones, see this one moving here? Oops. See this one move? Oops. Try it again. Here we go. See it moving on the same, it's the same zone, been translated over. The reason these prices are going through this action here looks kind of messy is because of these wicks that you see over to the left-hand side. Those wicks created this movement here. And you can see where my cursor is. You remember hold my cursor on the right-hand side? It's showing up this candle here, right? Right there. And then this one over here is showing up that wick. You can actually see it. I'm showing that to you so you can begin to understand and think about candle anatomy and candle biology. What's making up these candles here and these ones here? Well, it takes 10 of these to make just one of these, right? You see the color changing in the background? This is the London Open here. It's already begun. We're now 4 minutes into it. 1, 2, 3. This is the 4th minute, right? You can see we have 6 minutes left on the 10-minute candle. 10 minutes minus 4 minutes is the 6 minutes. Simple stuff. I know it might sound like I'm talking, like I'm speaking to a 6-year-old, but I believe in that. If you can't explain it to a 6-year-old and you don't understand it yourself, I understand this. I've been doing this for a long time. And that's what I'm trying to demonstrate here. It's just another way to think in very simplistic terms about candle anatomy and about market action here on the open of the London session. So what am I doing now? Well, if you watch some of my videos, you will know that I rarely trade on the first 10-minute candle. That's because this is an indecision candle. This is a market with a flurry initially, trying to decide which way it would like to go for the next little while. That might even be just the next few minutes, but it may be for the rest of the day. As I mentioned, today is a special day, in that today is NFP Day, non-farm payrolls at 8:30 a.m. New York time. It's only 4:05 a.m. now, so in 4 hours and 25 minutes, NFP, non-farm payrolls, and some other data comes up for Canada as well, U.S. and Canada all at the same time, and we should get some fireworks happening then. For now, watching this candle form and garnering our open range for the London session. If this candle closed right now, that would be my minimal or minimum. It would be minimal, but it's our minimum open range for me, right? This candle. Now that range is just expanded. You see how it's getting bigger? The candle's not closed yet, so this is the expanding open range at minimum. And if prices remain in that, I'm not interested in taking a trade. I will tell you that if prices get out of that initial candle once it's closed in 3 minutes and 55 seconds, I may be looking for something, but even then, I'm not loving this movement you see over here. I would like to see it get up into here or get down below here to be taking a trade. Hope that makes sense. Just a very simplistic and step-by-step way of working through zoning this market. Some people are calling these the czar zones now. This is just support and resistance, really basic stuff. This is the foundation, or a foundation, to price action and basic technical analysis. I'm a 23-year chartered market technician from New York Market Technicians Association. I'm a 25-year technical analyst. In other words, I was one before getting the credentials, and before that, a fundamental analyst. And so I've done it all, as they say. And this is just really back to the basics. And the most powerful stuff you can learn, I believe, is what you're seeing right here. And the rest of it, it's kind of fun. It could be considered pseudo-intellectual masturbation. Hopefully I'm not sounding too rude there. But this is the stuff you need to begin with. And sometimes you can end with this too, right? And build some significant wealth. The rest comes down to understanding entries, exits, dynamic shifting, managing positions. Position sizing is critical. We'll do videos on that. But ultimately, the entire game of trading, once you have the basic foundation in price action, the entire game is a psychological game. It's an emotional management game. It's an impulse control game. And we'll be doing a lot of work on that. For those who are new, I encourage you to check out my video from about a week ago called The Prince and the Magician. The Prince and the Magician. Just to begin to understand the psychological aspect. There's another one on human nature and trading. Encourage you to look at that. Why are you wired to fail at trading? You're wired to suck at trading, and you are. Most of you do suck at trading. I can say that with great confidence and a little bit of a smirk and tongue in cheek, because it's true. And I was born to suck at trading too. This is not something that comes naturally to anybody, thanks to evolution by means of natural selection. Still learning to speak the English language here this morning, folks, at 4:10 a.m. Been up since 2:10 a.m. this morning. And by some days' standards, that's actually sleeping in for me. But I get an extra hour. Normally, the London session opens at 3 a.m. my time, and will do starting next week. We've had 1 week where it's 4 a.m. my time, because the UK had the daylight savings time change, and we did not yet until Sunday morning, I guess it is, like Saturday night. All right, this candle closes in 29 seconds, and that will be my minimum open range in 19 seconds. Still hasn't, see that? My range has just expanded a little bit more. We have 5 seconds left. Let's see how this closes, and it might push up from here. Let's just take a look at this range and see if I'll take a trade there. 30 points, yeah, it's not terrible. There's the open range for me, is that first 10-minute candle. Can you see that? Very simple. We're likely to get a push up here now. If we break, likely to get a push up and close this wick. So that's a potential trade idea, by the way. I'm not taking it myself. I'm going to be waiting for NFP today. You see that there? This is a possible trade idea, not for me. I would like a bigger wick on the downside, and so this could very easily get stopped out here. But again, this is not an open trade for me. If this candle flipped itself now, I would consider taking that. So this is not open. This is not an active trade. If this candle flips itself, this wick is potential, right? But again, I would not take this too early in the session, especially on NFP Friday. I'll delete that to avoid any confusion. But this is now my open range. And it's a staging area, if you will, based on what I would like to see. That's a minimum staging area. I would typically include surrounding rejection areas, so it would actually look like this. And then given, you've seen this, me talk about this before, given that this area now is so small until this next key area, my real range becomes this entire piece you see here. This becomes my opening range. All right? And then we have some more things to contend with. So I won't be taking any trades here unless things really spiked up and begin to happen. I'm going to end the stream here. Hopefully that was a very good and clear instructional, and I think it was, on how to come in here clean in the morning and then begin to draw your zones and find structure. And now we have perspective and reference points from which to trade this thing and to make optimal decisions with respect to entries and potential exit points, right? Take profit points. Thanks for joining me today, guys. Have an amazing day. Remember, NFP, be careful out there. Lots of things happen on NFP, and you want to make sure you're positioned typically out of the market during those events and then waiting for things to settle and then look for optimal entries. But I'll leave that to you. Have an amazing day. If I don't hear from you or see you later, have an amazing weekend. Talk soon, guys. Bye-bye.